Hello everyone, welcome back to my channel. So today the market dropped again, probably because of today is the third Friday of September, as there's a saying that on this day is called 口周 Weeqing Day, that because of a lot of stock options, stock futures, and also index options and the future are expired, so that these option holders need to execute their options, and there would be a high volume in the market. Since the volume is high, so there may lead to the market panic sell-off. So I think that's why the market dropped today. But I feel like every time when there's a market correction, that also brings opportunities to buy some stocks which are not very expensive and has true value and will continue grow in the next 5 to 10 years. So today I would like to talk about one of the stock, which is Google stock. Ticker symbol is GOG or GOGL. So Google have three classes of shares: Class A, Class B, and Class C. And Class A and Class C are available for individual investors, while Class B are only available for the executive levels like Sergey Brin and Larry Page. The difference between GOGL and GOG is that GOGL has the voting rights while GOG don't have. For me, I think it's the same investing in either one of the stocks, because since the executives like Larry Page and Sergey Brin has more than 50% of the voting rights, I just think the individual investors' voting rights doesn't make a significant difference. So I really invest in whichever has a lower stock price. So recently there's a lot of discussion about whether there's bubbles in the US tech stocks. Well, I do believe there's tech bubbles for the tech stocks, but I don't think that's the case for every stock. Maybe for like Tesla and NIO, but I don't think it's for Google, like in my own opinion. So today I want to talk about some bulls and bears about stock and my own opinion, and hope that would provide some information to you guys if you are also interested in the stock. So it started with Sharman's bearish opinion about Google. Like I think several months earlier, he tweets about the reason he was bearish on some tech stocks, including Facebook and Google. So since he was a former Facebook executive, his opinion was valued by a lot of people, and he was also interviewed in CNBC to discuss the reason behind. So to sum up, he thinks there's mainly 4 reasons that he was bearish on Facebook and Google, these type of tech stocks, these type of giant tech companies. The first reason is the threat of new products. As we know, recently one of the hot topic is TikTok. He brings that since there's a rising of the new tech products, they are increasing rapidly and occupies the market in the speed that none of these they are occupying the market quickly. And for those giant tech companies, because they are already grow so big, so the resource allocation is not optimal, and when the organization is big, there tend to be some politics inside. So he thinks that is not good for the product innovation and new product development. So that's the first reason. The second reason is regulations. I'll combine it with his last reasoning, which is antitrust. Because of these tech company is making so much money and it's being so big, and it's make a big impact on the society, so there's more and more regulations on these new tech companies that may not existed like 5 years ago. For example, Google wanted to acquire the company Fitbit, and even Fitbit and Google are necessary in the same industry. The acquisition has been pending for more than 1 year because of it's going through the regulators' approval. So because of that, Sharman think It will slow down the continuous acquisition and the innovation of the big companies and slower their growth. And the last reason he mentioned is the tax issues. Because big companies have so many profits, the government tends to charge a higher tax to these companies. And because of that, they may have less free cash flow. And because the stock price is present value of future cash flow, so the decreasing amount of cash flow may also affect their stock price. So there are still some bullish opinion about Google stock. The first one is that as Google is the biggest advertising companies around the world, most of this revenue comes from advertising. And for the people who want to advertise in Google's platform, the logic is very simple. Wherever there's users, wherever there's traffic, they want to do advertisement in that platform. So as long as Google has maintained its user base as well as its traffic, they are unlikely to lose these advertisers. And for the reasoning that the new platform and new products may grab the users from those older platforms, I will not worry about so much, because what the advertisers always want is a certainty that they want a certain click-through rate, they want a certain conversion rate, which Google has advantages since it has accumulated data for so many years, so it has a very solid return on the marketing budget to those advertisers. While those new platforms, since their products are still in the iterating stage, and they maybe do some adjustment from time to time, so that the numbers may not be certain. For the big advertisers who want those certainty, like return on their marketing dollars, I think they will continue using those old platforms like Google's platforms. The second bull opinion is that Google, not just its search business and its advertising platform, it also has Android system, which also a monopoly in the system, along with Apple's iOS system. And aside of Android system, Google also have the superstar products like Google Chrome, while they also have a very loyal user base because of the extensions they have. And also not mention their Google Suite, including Gmail, Google Map, Google Drive, etc. So if you have the previous data in the Google's ecosystem, so you would probably go back to the system, and if you want more space, you would probably purchase the extra iCloud space. So because of the monopoly in several areas and also the huge amount of data it's already collected, the users are very sticky to their platforms. And the third reason is that Google's parent company Alphabet nowadays is not just a search company, its business has been very diversified. So even though one of its business was affected, like in the pandemic period, maybe their advertising revenue has declined a little bit, but some other revenue may increase. Every year, they use the money they made from advertising or searching to invest in some new product or project, as we can see that it spend a large amount of numbers in their R&D cost. And Google, I think the growth point for Google is their AI technology rather than their current business. So as the biggest advertising companies in the world, Google has accumulated a huge amount of data than any companies else. Because of that, and I think in the future, data will be one of the most valuable assets for companies. That's why Google has some competitive advantage that other competitors would not have. By using this data, Google can develop better AI technologies and better user experience through machine learning, and those data can help the algorithm to learn more about every users and develop better product for individual users. I have followed Google for a long time. The current price around 1,400, I do think it would be a good time to invest in. While other tech companies, their PE ratio is more than 100, like Apple and Tesla. Google's PE ratio is still around 30, which is relatively not that expensive. And when we're considering that in this recovery where a lot of tech companies has hit its all-time highs, Google hasn't hit its all-time highs this time yet. So in these circumstances, I think Google may be one of the good opportunity right now. So to sum up, Google has been monopoly in several areas, including its search business, Android system, and its Chrome browser, which has accounted for more than 50% of the market share. And because Google has a very comprehensive ecosystem, including the software, the hardware, and their system, so I believe Google has a wide moat and have a very long-term competitive advantage when we are looking for its future growth. So if the stock prices continue drop next week, Google will be on my top list that I'd like to buy when the price drop more. So yeah, so that's all my thoughts about Google. Thank you guys for watching, and I will see you in my next one. Bye.